Hello, M&A scientists. Welcome to the M&A Science Podcast, where we learn from the best in M&A to uncover proven techniques for enterprise value creation. If you're interested in learning more about how to optimize your M&A practice or want to get involved with our community of forward-thinking M&A practitioners, visit mascience.com. Subscribe to our free weekly newsletter. If you want to keep up with us on the go, head over to LinkedIn and follow M&A Science. I'm your host, Kison Patel, founder and CEO at Deal Room and chief scientist at M&A Science. Joining me today is Sindre Talleraas Holen, head of M&A at Visma. Visma is a leading provider of cloud-based business software, specializing in accounting, payroll, invoicing, tax, and HR solutions. Visma has over 16,000 employees, serving over 2 million customers across Europe and Latin America. Today, we're going to talk about how to build a global M&A machine with local expertise. Sindre, how are you doing today?
Good. Doing good.
Thank you for hosting us live here in Oslo, Norway, at Visma's headquarters.
Yeah, it's a pleasure for you coming. Great having you.
This is
and welcome.
Great excuse to get out here to Northern Europe and hit the slopes as well.
Yeah. And I think you came with the snow, right? So I think over the last few hours, 0.5 meter of snow have come here.
I had a lot of fun yesterday. But that's not the most exciting part. I think this conversation is going to be a far more than that, even though it was an amazing day of snow yesterday.
Can't imagine. Yeah.
Can we kick things off with a little bit about, I think we should actually do a little background on Visma first before I get to your background. It's just been really interesting. I read up on it, and the company has a very extensive history with M&A from even how it was formed. Can we talk a little bit about that?
Absolutely. No, I think as you say, right, it's long history. Visma was formed in 1996 when 3 ERP systems were actually merged. And then our former CEO, he then joined Visma back then in 1997. And then, rest of course is history. Back then we were listed on the Oslo Stock Exchange. And then just around 2000, just before the .com bubble bursted, Visma were able to sell their shipping division. So there was a marine division to a telco company, and they sold it for like 100 million euros, which at that time, it was absurd multiples. And you would question why people would actually buy it for that. But nevertheless, what happened was that Øystein Moen, then the CEO back then, he actually got a lot of criticism in the media because he didn't take shares. He only took cash. But then, of course, the .com bubble bursted a couple of months later, and then Visma, back then it was a very small company. It was a small ERP business. But then Visma actually had 100 million euros of cash, and all valuations dropped significantly, 90+%. And then the M&A spree started.
Wow.
So that's how sort of the modern Visma started. And then Øystein started to, together with the CFO, started to do M&A quite a bit, buying competitors and adjacent products around ERP. And then HG Capital delisted us from the stock exchange in 2006. And I joined 2009 as a management trainee, as a part of the graduate program. So I've sort of my history starts there. But I think from there, I think very early on, we sort of deliberately took a decision to move towards cloud. I think that was pretty bold back in 2010, right? So already back then, starting to think about cloud, that was, right now it's a complete no-brainer, but back then was not.
Early. Yeah,
it was very early.
Until like even 13, but then enterprise took much longer to adopt.
Indeed. So if you look at it from that historical lens, I mean, it was a pretty bold move. And it's going from on-prem to cloud. It's also painful, but when you come on the other side, then it's a much nicer place to be. Now we are 90+% recurring cloud, and then it's real cloud, not hosting, not ASP, and it's sort of multi-tenant SaaS.
How many deals has the company done since inception?
Yeah, that's also a good question, right? You somewhere along the lines, I mean, somewhere you sort of lose track, I guess. But sort of my counting is 350 plus, probably 400, right?
And then you personally, how many deals have you been involved with since you started in 2009?
Yeah, so probably over 300.
Yeah, so a lot of this activity has been sort of in this recent decade.
Yeah, even though they were quite acquisitive also pre my time. But then you have to recall it was the CEO and CFO who did the deals themselves. So it was more a left-hand activity. But now when I joined, we sort of set up we were actually a two-man band running around in the Nordics buying small software businesses for a decade. Then my boss left for HG, and I took over sort of 5-6 years ago. And for a short stint of period there, I was a one-man band, but then I started to hire and now built sort of the current M&A team.
What's your personal background that qualifies you to be heading up all this M&A activity?
That's a great question, right? I mean, I came straight out of university, so company man. Started as a management trainee. Actually, I think 3 out of the top management team is actually coming from that graduate trainee program. So I think that's pretty unique.
Wow.
And then, very quickly it turned into M&A. So, I mean, yeah, I've been doing M&A almost for 2 decades now.
Is this like one of the top Ivy League schools that print out people like you? Or is it, it more of just give somebody with ambition a chance and see what they can do? I think
Visma is a pretty unique place, right? I think giving people a chance, and then when you swim at 10 meters, then they throw you at 50 meters and throw you out at 100 meters and so on and so on.
See how far you can make it.
Yeah. So
you came right out pretty early. What was the experience like in the formation of the M&A team? Because you said prior to you joining, it was mainly the CFO and another person in the company that was driving the activity, but then they set up an M&A function.
Yeah, I mean, this is down memory lane, but I was actually quite bold back then. This 2009, right? Straight out of university, I wrote the CEO an email, sort of asking, because we were actually planning an IPO back then, 2010, and then KKR preempted that, and yeah, rest is history. But I actually wrote him an email and sort of, hey, do you need? I've just started in Visma. Do you need help with the IPO? Pretty bold, maybe even unheard of. But yeah, I did that, and he replied, and the plan was actually to hire a IR, head of IR, and M&A, and then yeah, when you have one big investor in KKR, then you don't need IR anymore, but you need M&A. So the IR function just shut off, and then we had this M&A team. Me and my former boss.
So this really originated of you sending a cold email to the CEO. Like, he doesn't know you. You just reached out and said, "Hey, I heard the company's going IPO. Can I help out with it?"
That's pretty much it.
Now the KKR story is actually really interesting because I read about it. They came in. I didn't know it was tied to the IPO. I know they bought a majority stake of the company. HG Capital is still involved.
Yeah.
And then later on, I guess HG ended up taking the majority back.
Exactly.
So
KKR should regret, but yes, that's the story. That's the story.
How long were they owners for?
Yeah, I mean, we've been. It's a typical M&A or the PE cycle, right? So it's that 3 to 4 year cycle.
Yeah, enough to show good IRR, then move on to the next thing.
Exactly.
So the cold email that led to, hey, let's talk a little bit about this. Well, we're changing directions, but we still need M&A, and then want to start doing some M&A.
Exactly. So, and then my first job for the CEO then, back then, 2009, that was actually to hire my own boss. So, and yeah, again, rest is history.
Yeah. Well, it's still a lot more history. That's where all the volume of deals happen.
Yeah.
Sorry, go ahead.
No, and I believe, we were pretty efficient, 2-man band running around, mainly in the Nordics, a little bit in the Benelux, a little bit in Central and Eastern Europe. But we were able to do 10, 15 deals per year. So for a 2-man band, that was not bad.
What are like the top 3 big patterns, themes, must-haves, that you learned over time?
A good question, right? I don't know if there's any patterns. So I mean, to set the stage a bit, right? The type of businesses that we acquire, that's typically well-run companies that has a proven product, happy customers, happy employees, very solid management. That's the run-of-the-mill M&A that we do. So to have that background, we essentially buy good companies.
Yep.
Don't buy turnaround companies or turnaround situations. High level, I would say the important aspect is actually to stick to what you know. For us, it's always to have that North Star, to have that sort of alignment with the equity story. I do believe that's super important. So to always keep that in mind. Will this enhance the equity story? How does this fit the equity story of Visma? I do believe that's very, very important. So that's maybe one element. And speaking about alignment, I would actually argue having that internal alignment is as important, if not even more important. So with all the internal stakeholders, we always say that M&A, we cannot be a champion for a deal, right? Then we would have done a lot more even. We always need to have that operational champion, right? So to already pre-LOI, you sort of need to have that internal alignment in that context of, okay, is this a 100% acquisition? Is it an earnout? Is it a 1-year earnout? Is it a 3-year earnout? Is it a 5-year earnout? What type of metrics do we measure? Is it an EBITDA game? Is it ARR? Sort of all these type of discussions that you need to align internally. I do believe that is very, very critical. Maybe the last thing, I mean, and this is more maybe relevant for Visma as a firm, but we like to buy proven companies. We have customers. We're not a VC player. So VCs, they have a different agenda, right? 1 out of 10 hits the jackpot, and then you're all happy. But we are not a VC play. We like to buy proven companies with proven customer bases and proven products.
Ideally safe bets. Every now and then we do a bit more hairy bets, but it's not that's not the run of the mill. This is helpful. I need some guidance on where to take this interview. So stick to what you know. Align with the story of the business, the Visma story. Having an internal operational championship that's really going to deliver on the results.
Yeah.
And then buying proven companies, ones that aren't just big risk bets, but you're sort of building a model that gets you returns. Does that sound right?
Good summary.
Sick and tired of running M&A deals on the seller's terms? It's time to flip the script. The Buyer-Led M&A Virtual Summit, designed for corporate acquirers who want to take control of their deals from sourcing to integration. Join us for a live M&A Science podcast episode with IVC Evidencia, the largest veterinarian roll-up in the world. Learn how they pull off 300 acquisitions in a year across 11 different countries at scale, at speed, without the chaos. And hear how Brenton Point Capital Partners, Easton Select Group, and others scale roll-ups at speed. Other M&A conferences will charge you big bucks for this kind of content, but here you don't pay a dime. See for yourself with the link in the description. This episode is sponsored by Deal Room. And if you're in corporate development or managing M&A deals, this is something you'll want to check out. On April 16th, we're hosting a live, all demo, no pitch session It's a hands-on look at how teams are using Deal Room to set up deal rooms, manage permissions, and keep diligence moving without all the manual chaos. You'll also see how Buyer-Led can lead the process even if the seller isn't using Deal Room, and how that gives you a real edge, better visibility, faster timelines, and fewer drop balls. It's designed to give you practical takeaways you can use right away. Head to dealroom.net or click the link in the description to register and see how Deal Room can make your life easier. Back to the episode. You know, I'm curious about the culture of doing acquisitions. I mean, you know, you have Europe, and then there's, you later got into Latin America. I mean, are people just receptive? Because it sounds like just so many deals you've done that you call people and they're like, yeah, sure, we'll talk to you. We'll take an offer. I mean, it sounds so easy. You get what? Just walking around the office, seeing all the buzz around here. I'm like, this is pretty interesting. They make an M&A look easy. I've looked at your website. You've done deals in so many different countries. Let's take that alone. Like, how many different countries have you done deals in?
You know, it must be 30 plus.
Yeah. Okay.
Yeah.
So is there an element around that? Is like M&A received culturally different between company or countries as you approach targets?
Absolutely. No, I think it's very, very different, right? It's, I mean, even only in Scandinavia, right? Norway, Sweden, Denmark, and Nordics, Finland. I mean, it's very, very different, right? People might from the US perceive that, Nordics, same, very different, right? So even here, it's very different. And the more south in Europe you get, the more emotional it gets as well. And then you throw in Latin America in the mix, and it becomes very different, right? So I always have a saying, right? M&A is local. That's just super important to know. And 3D is always way better than 2D. So you need to meet people locally, speak the local language, see them in the eyes, and really be that local partner. I do have a tremendous faith in that. So that's also why sort of the M&A team right now, right? We're almost 20 people, sort of core M&A professionals, but they are based all over the Nordics, Benelux. You know, we have Germany, France, Spain, Italy, Central Eastern Europe, UK. So they are, I mean, back to M&A being local. That's so important.
And that's what they're doing, is they're adapting culturally, locally, and catering to that M&A conversation based around that.
Yeah, and you know, it's all, language is one thing, right? To be honest, it's almost the easy part, but it's about the way you're negotiating in a country is very different, right? In Brazil, I've just learned, you know, that after the LOI, that's when you really start to negotiate. So
after the LOI,
after you think you have agreed on everything, then that's when the negotiation starts. So it's just very different country to country. So to have that local domain knowledge, to have that local knowledge around sort of the whole cultural aspect, I do believe it's super important to be a local.
Yeah, that's so interesting that you had such a diverse experience around it. What other things do you see? I'm curious, like what countries are the easiest to work with? What are the hardest ones to work with?
It's a good question. There is no. I think all countries, they have their peculiarities and their specialties.
And then it goes, because you obviously, like, I'm from the US, and it's like, you're going to have some really good sellers and some really, really bad sellers within our country. And I take it every country is similar too. You're going to have some good apples and bad apples.
Absolutely. And you have that in Norway, and you have that in Spain, and you have that in Argentina, right? That's just the way of...
There's some fun cultural differences to sort of accommodate it with.
Yeah, but I mean, take trust as an example, right? I mean that's here in the Nordics. Take Norway. We do actually trust each other, right? There is a lot of trust already on the first date, essentially. And it's not uncommon that you even start talking. I mean, we're a commercial people and opportunistic. Can even talk about pricing on the first date, right? First meeting, then it's not uncommon.
Yep.
Doesn't happen always, but it's not uncommon. But if you go, the further south you go, and Latin America as well, I mean, trust, that's super important. And particularly, I mean, everyone knows about Visma in Norway, Nordics. Not that well known in Latin America yet. So to have that trust, I mean, that's not built over Zoom or video. That's one thing. And the other thing, of course, is it takes time, right? So to talk about the family and talk about business and get to know each other, these things are very important.
Okay, so your advice to me, where I'm working on first international deal, let's just say it's in Germany. I should go meet the people. What else can you tell me? What else should I be doing? First deal I'm looking at, it's international by nature.
In Germany.
Yeah.
You should look forward to the fact when you're signing the deal and they are reading it up word by word at the notary, the whole thing from A to Z. And it usually takes between 10 and 15 hours. That's a highlight.
Yeah. Do I have to sit there through that?
You have to sit there.
Really?
I hear they do drink champagne while reading.
Okay,
But yeah, it's very, very German. But yeah, I mean, meeting each other face to face, I do think that is important. Whether it's in Germany, whether it's in France or Norway, to be honest, I think that is important as part of the M&A game.
Any other nuanced things I should think about culture? Should I bring them like a nice, cool M&A science pin like I brought you?
Yeah, maybe. Maybe they get as impressed as I were. No, but it's talking more from the Visma perspective, right? Yes, there are all these cultural differences, but I would also say software entrepreneurs and tech entrepreneurs, they are tech entrepreneurs. That's a universal thing. It's almost a universal language to meet tech entrepreneurs and to speak to other tech entrepreneurs. That's they do tend to bond across borders. So I wouldn't underestimate that point either, to be honest.
The industry culture.
Yeah.
Let's talk about execution. And one of the big things I've been, I don't want to use the word ranting, but advocating is around buyer-led M&A. And it's just what I've noticed companies and the way they evolve their M&A function really starts from seller-led. And then as they do 10 deals, it becomes very buyer-led, all in the pursuit of better M&A outcomes. You've obviously seen tons of deals. What's your view on a buyer-led approach to M&A?
Yeah. No, and I guess you're right. I mean, when you start doing M&A, by default, it's a bit opportunistic in the beginning, right? And it become quite seller-led in the context of what's for sale and those type of things. But for us, I mean, we like to drive the M&A agenda, right? We have a pretty clear agenda in terms of what type of targets we're looking for, what type of geographies, what type of products, what type of growth rates, SaaS KPIs, cash flow margins, et cetera, right? So we have that, and I do believe for us that makes it for us it's critical to own that ourselves instead of just being completely opportunistic and run after whatever pops by our desk. I mean, I get probably 10 inbound emails every single day by people from brokers, small broker houses all over the world, shooting an email on a random verticalized ERP or whatever it is all over the world. So you can't jump after all of them.
I mean, so let's look at that. You have all these lead sources. Where does that sit in terms of you get a bunch of inbound versus proactively pursuing opportunities? Do you sort of prioritize one over the other? How does that play out?
That's a good question. And I mean, yes, we get a lot of inbounds. I think, when you've been doing this for almost 2 decades, I think you sort of have a very good gut feel in terms of, is this good or not, right? So is this worth our time or not? So I have a pretty good gut feel on that.
So you do like a really quick assessment of like, all right, are we going to click down in this or not?
Yeah.
Otherwise, when you're proactive, you sort of know your scope pretty well.
Exactly. So I mean, I probably spend 10 seconds deciding whether or not this is something to pursue. But of course, I mean, us reaching out to targets, that's name of the game, right? I think those are also the best leads.
What about like actual execution? So when you reach out to the targets, that makes a lot of sense because you sort of probably even know the business pretty well ahead of time.
Yeah. I mean, well, it's yes and no, right? Even in the Nordics, right? I've been doing M&A here for 2 decades in Norway. Right? You would argue I probably know the B2B software market here pretty well. But even here, 5.5 million people, 600,000 businesses. Every now and then it pops up random new companies that I've never heard of. That's 10 million ARR, growing super fast. Right? So I don't think it's possible to get sort of a complete oversight. But I think what's unique with Visma is that we have around 20 M&A professionals only working with M&A, A to Z. But I would actually argue our M&A department, that's 15 or 16,000 employees. And those are that's the front line. And they are the ones, I do believe this is a pretty unique culture, but sort of the whole culture of Visma is about growth. And these guys, they know who are they losing to, who are they winning against, who are they having most API calls from, what would make a perfect add-on to an accounting system, all these type of things. They know that more than us in the M&A department sitting and Googling or using AI. So I do actually believe sort of leads coming from line management, those are the best leads.
How do you get them together? Like, are you running around trying to have as many conversations to see what ideas they have, or are they more built down the process where they're bringing stuff to you and they start negotiating, sending out LOIs and then tell you about it?
Oh no, it's I actually say there should not go out any LOI without my signature on it. That is important. So I'm aware of all LOIs.
But how do you build a funnel out of this? Because I agree. I see how this could make a lot of sense. The people that are in the market and see all these opportunities.
Yeah. Also, the fact is, it's very clear guidelines, right, across the Visma organization that line management, they don't negotiate pricing. They can talk to companies, they can talk to competitors, they can talk to adjacent companies, etc. But they don't do M&A. But they are a friendly or a warm intro.
They know enough to know that, hey, if you come across an opportunity, we have a process for that.
Yes. And then they tag us into it.
How do you address that? Is that something you just hop on a company-wide call periodically and put out there, or what's your approach to getting that system set up?
Yeah, I think I wouldn't. I think to be honest, I think it's fairly easy, right? It's people know when they should not start talking about M&A, and I think some MDs are, for instance, in Visma, they are more proactive than others. I think that's like anything in the world, right? It's some like it, some doesn't. But at the end of the day, they also know that pricing, structuring, these type of things, then there is actually a world-class M&A department that we should pull into this.
So the leadership team is really what's aligned, and they have a good sense of that because they just know the workings of deals they've seen done before and just how the company's culturally thinks about M&A.
Exactly. And the reality is once we actually start talking about M&A, I mean, we're always actually involved. That's just the way it is. So
what about the actual execution of deals? When we think about being buyer-led, is there things you do there to drive that process? Because seller-led process, you got a bank there and they are there and they're trying to get the deal done as fast as possible. But like I said, if your goal and your success track record is more about having the best outcomes, what are the things that you do to ensure that?
Well, we have our standard procedures, right? We I think that's also a good thing, right? Because even though we use a lot of operational people in the due diligence streams that we're doing, right? We have an in-house team on FDD, on legal, on tech, etc. Right? So we can do a whole full-blown M&A process in-house. quite a few of them are very familiar with sort of the M&A process, but there will always be people that are not. So, but we really try to sort of have a streamlined process, A to Z. This is how we do things. It's a Slack channel. This is how we work with that. This is how we communicate with each other, and to really be transparent in that group. I think that is important. We have our playbook, and the M&A team as well. We're constantly, it's the M&A playbook in Visma. It's constantly developing. We have people from competitors. We have people from PE. We have people from investment banks. We have people from other buy and build platforms. We all take that and always tweak it to have best practices all across.
So there's a lot of different variables and nuances that you can continuously tweak to all in the pursuit of better outcomes on the deal.
Absolutely. And we, as you said, right, bankers, they tend to try to do a deal as fast as possible to get to a closing. We've done a deal in a week, from sort of reaching an agreement Friday afternoon, and then Friday next week we've actually done the deal. Last year we did a deal here in Norway, case management system called Akos. Probably met them first time in 2011. It's 13 years. So there are long dialogues as well, right? Also back to trust and relationship building and these type of things.
Yeah, that's a good point. If you're proactive about it, you have to build the trust first. And then those timelines, it's all for what's best for the deal.
Exactly.
Unless it's a bank process and it's all about getting the deal done as fast as possible. But I think that is like, there's no right answer on that. I've noticed that deal by deal doesn't make sense to actually slow the deal down and really think through how the company's going to integrate. Have you found that out?
I guess that's why both of us like M&A, right? Is that each deal lives its own life, right? And but I would say absolutely. If there are regulatory things coming in, if there is performance that you're questioning, whatever it is, right? Then use the time if you're able to.
Do you, this makes a lot of sense in terms of how the execution, you drive it from the buy side, get the best results, keep optimizing it over time. Going back when you talked about sourcing, does your approach, because I know you mentioned the best is getting folks in your company proactively identify opportunities. Do you see any of that change across geographies? Like, is it sort of like consistent across the whole company, or is it, hey, certain geographies you actually have to take a different approach to source deals?
I would say, are there differences? Yes. Are they based on a specific geography more than the specific individuals? Probably no.
Okay.
I think it's more individual driven. Sort of if you have a local managing director in France being super pushy on doing M&A, then you let him be that. And we try to help him and be there and really get things done. But maybe it's more on an individual basis than sort of.
That was just curious about that. If like, hey, is there anything that changes there? How about, negotiation was a good example of how that could vary culturally as well. Valuation. You got an interesting view because you've done a lot of deals. We've talked a little bit about this before. In different countries, do you see differences in how software businesses are valued?
Short answer is yes. Long answer, I'm not sure if we have time for it, but no. I mean, jokes aside, I think it's very different, right? If you turn the clock, say 15 years back, I think back in the Nordics when we were doing deals here, I mean, we were the only girl at the dance, right? So we were also sort of setting pricing ourselves, and we were able to do sort of nice EBITDA multiples.
What were they back then?
They were nice compared to what they are today. You can even do single digit, right? I would say
let's say a single digit, we cut it in half, and you go below the midline or above.
yeah, and it's also case by case. That's the reality.
We can reminisce about good old days on the podcast. There's nothing wrong with that. It's just everybody's going to kind of clench your teeth a little bit about.
You should have bought more back then. That's the. But you have to also remember, right? There were a lot of question marks back then around tech, right? Around cloud savviness, and cloud wasn't actually that mature.
That's true. People didn't know. They didn't know it's the direction things were going to go.
No, and it was also a bit of a. You knew something would happen, right? With around tech. But there was always this sort of, I would call it almost an inherent discount that, okay, what's going to happen here? Right? There were just a bit of a question mark in the market around that. But I mean, we have a multi-decade view on tech in general, right? I mean, we've already been through a painful transition, and that's how it is. Now on the other end, 90+% recurring SaaS, then that's of course a much nicer place to be.
What about like today when it comes to valuation? Teach me this stuff, because I don't want to screw up, and I don't want to overpay, and at the same time I don't want to insult somebody.
Yeah, no, it's that's a good thing, right? I mean, I don't want to offend you either and give like secret sauce. So if there's anything you want to answer, let me know. But yeah,
I'll tell you what I learned so far. One, the growth factor matters, and I feel like there's almost a category. If you're under 10% year over year, you're sort of the bottom side. And then maybe 10 to 40% is another category. And then like the 40 to 100%. And then I don't know, if you're above 100, you're probably not talking to me. But I feel like there's little buckets there that do put you in a category. And then you can throw a multiplier on that. I'm still a little confused about software. I think is unique too, because we keep that as our theme, because I never heard of this thing when I first got into the industry of revenue multiplier. Now it's like a de facto. Everybody only wants to talk about revenue multiplier.
Yeah.
But there's still instances when you talk about EBITDA multiplier.
Yeah.
And if I'm still confused of like, when would you talk about one over the other?
It's a good question, right? And it boils a little bit down to, I mean, M&A in general. M&A is not rocket science, right? And I do believe we have the benefit of having done 300-400 plus deals. So we have a library of deals and pricing that we sort of deem, okay, is this market or is it not, right? Last year we bought a 10 million ARR business growing 100%. Do you think you're able to buy a company like that for? Yeah, I mean they're burning money. So
you don't say the word EBITDA.
So the EBITDA is not even there. But I mean, do you think you're able to buy that for sort of mid-single digit ARR multiples? You're not, right? We have a very good perception of what market is. It does vary as well during country by country. Some countries are more expensive than others, just the way it is. We see that across Europe. We see it in LATAM. But I think overall, the market is fairly educated, right? They do know quite a bit around sort of, okay, what can I expect here? As you said, right? If you're a single digit grower, that's one bucket. I wouldn't put a bucket on 10 to 40% growth. I'd probably put it 10 to 20%. Sort of that's one bucket, and then 20 to 40 as the next bucket. And then, of course, that helps the multiple on the sales as well.
What's the other bucket? 40 plus?
Yeah, 40 plus. I think that's probably
So 40 plus gets me about as same as the 100%?
No, 100 is quite a bit more. So 100 is always better than 40, right?
All right.
But yes, I mean, that's probably where it is.
Or can we role play this out? Let's say my business, 10 million ARR. Don't take this is all like for education purposes here, but let's say it's like 1 million net income.
Yeah.
It's a $1 million net income. And then we're consistently doing 40% year over year. At least this last year we did. Yeah. I mean, plus, last year was 40%. This year we're going to get it 50, 60, put a whole new management team in.
Oh.
So I got a good story for you, right? 10 million ARR. Last year we closed out right around 45% year over year. And then this next year, whole new management team. I know people always have the chart that goes up and to the right, but I have a high level of confidence we'll hit 50, 60%. And that's what I'm really pushing for. What would you value a business like that?
It's a good question.
SaaS, enterprise, B2B, 40K a year, ACV.
Yeah. There are probably a couple of other metrics I would push for, but I mean, high level, right? I'm also TAM-wise. I mean, you're very M&A focused, right?
Very M&A. So let's be upfront. Let's talk that through. We talked about TAM, and I said, look, the current path we're going, we sell to corp dev, we'll sell to private equity. We're probably going to start tapering around, let's say 40 million ARR.
Yeah.
That's a given. It's definitely a smaller thing. We'd have to find adjacencies. We'd probably want to recap the business, bring some capital in, and do some acquisitions around those adjacencies.
Yeah.
Okay. Now, if I was, let's say in the 0 to 10% category, you're shaking your head. You don't even want to talk to me.
Then, it's not necessarily a Visma play, right?
Okay, so I'm getting an X. I'm getting a 0. So you don't want to talk to me at 0 to 10. I'm going to have to go to.
Well, if it's 9.5, it's much better than 1.5. To put it that way.
Okay. Who's going to be my buyer at 0 to 10? There's probably going to be some.
you always have someone, right? And I think there is. I mean, if you look at this, right, there are so many sort of these permanent capital vehicles out there, only focusing on B2B SaaS software companies, or not even SaaS, right? It can be on-prem. So many copycats of Constellation. Could even argue ourselves, even though.
Okay, so I'll call Constellation, and I'll get a quote from that.
You'll get a quote from them, I'm pretty sure. It's all relative. It does depend. I mean, if you hit the right buyer that is able to value you and sort of put strategic premium on top, I mean, pricing is, at the end of the day, pricing is what someone is willing to pay.
That's a fair acknowledgement. Okay, what valuation is the buyer's, how much the buyer is willing to pay at the end of the day, which is unique to every single potential buyer.
Exactly.
So we'll acknowledge that. The EBITDA thing, I didn't quite get the answer on it, because you had a good point of hey, these are negative 0 EBITDA businesses, and then you got a higher growth rate, you still got a strong value. What are the circumstances when I actually would want to use EBITDA over gross revenue?
Yeah, typically when the growth rate is flattening out, and when you sort of realize, because at the end of the day, why are people applying ARR multiples, right? Or sales multiples? It's because you have an underlying belief that any given software business should be able to earn 30, 40, up to 50% margin. If you don't have that belief, then you shouldn't do that investment. Right? So over time, you need to have that belief that any software business should be able to scale. And that's sort of the calculation you're doing on back of an envelope when coming to an ARR multiple.
So ideally, it's that 0 to 10% bucket, but I got some confidence I can increase that margins, and that's sort of going to be my value add. So I would pay an EBITDA on that. Yeah,
essentially.
That's what every other industry does. All the traditional businesses, basically.
Yeah.
I think software is unique that there are so many businesses that are in high growth category.
Yeah, exactly. And it is, right? Software is, I think our former CEO, he said it, software is eating the world in many ways, right? It is, that's also a fact. And I think many investors have seen that. I think the VC tourists from 2020, 21, even maybe 22, they're gone. But I mean, there's just so much capital into software B2B. So yeah.
How do you see that panning out? Because those valuations were insane. I had a friend of mine show me a 20x term sheet, and I was like, take it today. I'll take it if you don't. But then those companies that raised at that valuation, how do you, is there a thing that you kind of track them and saying, hey, if this company hits, there's still opportunities there where, it could be a down round, or it could be just, they're going to write it off their portfolio and you buy it for a song and a dance? Is there anything around that you look at?
We've seen it all. We've seen companies that are still sort of really pushy on that. Yeah, I sold in 21 at X million. Now we're worth even more. We see that. Maybe not rational, but still we see it. And then we also see companies that are doing a 50+% call it sale from
Discount.
or discount from the 21 pricing, or even more, right? So we see it all, and then every now and then we even can buy them from bankruptcy.
I was gonna say, because if they don't do that, then they just
So we've seen it all. Believe me, in that term, in that type of context.
Any deals you like from those situations?
Like in terms of
like, hey, I don't mind buying it out of bankruptcy, or buying at a discount. You obviously don't want to pay the person that's got the same metric anticipations as 21.
Exactly. No, so I think we're opportunistic, right? So we whether it's buying the tech, which is still a solid piece of tech, if that makes sense for us, I mean, we're all open for that.
It depends on your appetite for it. You get to pick and choose from the buffet, I guess.
Yeah.
Okay.
Anyways.
The valuation part, you don't think it's like a big difference country to country? I know like software, I feel like there is some universal aspect that we just talked about. But is this going to change if our business was located in Norway versus Latin America or the US?
It does depend what you're doing as well, right? I mean, Norway, if your TAM is 500,000 businesses versus, I don't know how many businesses it is in the US, it's 30 million plus.
Yeah.
Probably.
Right.
If your TAM is 30 million versus 500,000, does that have an impact on pricing? Short answer is yes. I think looking from a Visma perspective, right, we like stuff that has a lot of local rules and regulations, right? The more the merrier, essentially. So tax, accounting, payroll, invoicing, I mean, need to have stuff, but with a lot of rules, a lot of regulations. And every year, typically, you change something there. So the more local rules and regulations there is, the better it is for us.
Why is that? Just so it's like a moat? You don't have to worry about a bunch of competitors popping up?
Well, they try, right? But I would argue that it's very hard. Taking one accounting system from one country to another, super difficult. So you do see it, but in many ways, like you see it in Commonwealth maybe, that some have succeeded doing it. But still there are, first of all, it's the same language, but that's typically the least worry. It's around the habits, the local habits and the local rules. Around how you work with the system. So even here in the Nordics, no one has really succeeded in taking one accounting product to another country. So it's very different.
So then I would predict you got low churn rate because of that as well.
We do. But at the same time, due to cloud, I mean, it's fierce competition out there. So and I think fierce competition makes you and your own products better. So I do think it's sort of, we nurture healthy competition, but at the same time, by default, ideally you don't want to, if you're happy, you don't want to change your payroll system or your accounting system.
So that's an interesting view on how you look at it in terms of the type of businesses. And then valuation, the TAM part makes a lot of sense because that's a big thing. We got a big market to go after. There's a lot of growth opportunities. You value business that way. What about like exit? Does that come in play? Of like, when I look at a company in the US, I say, okay, prices are up because there's a lot of people trying to acquire the business, a lot of exit options. I'm not just talking to you. That's what I'm trying to tell you. And then, so how does that still play of like, if you looked at a company in Italy, like not a really hotbed M&A market over there, I sort of would assume that there's not that many people that would be interested in the same kind of SaaS business that was based in Italy.
Well, you should be surprised. I think there's every market they have their own investor environment as well. I think we see that, and I think whether that's private equity, family office, trade buyers like ourselves, it's always, you always have large internationals that would like to enter, and then you have all these local boutiques as well. So I think it's a different investor scene, but I would argue it's always there. But then again, it can also boil a little bit down to pricing.
Do you have, like, does this calculator get adjusted at all country by country?
For us, yeah, and it's also, short answer is probably yes. It also has to do with the geopolitical risk in any country, right? We try to do business in healthy, stable, safe economies. I think that's what we like. But at the end of the day, you do adjust. But then you're also adjusting to the market, right? So the market values different businesses differently in different countries.
Do you have like a playbook or approach when you buy a business in a brand new market that you haven't been to yet?
It's a good question. We do.
Can I buy a copy of it? Okay, I'll take the high overview of it for now.
Yeah. No, but I do think, right, you need to, whenever we enter a new market, right? Last year we entered Italy, we entered Croatia, so 2 new countries. Italy fairly big, Croatia fairly small, right? But still, it's two very, very different markets. But we entered those 2 markets, and this year we will enter new markets as well. I'm pretty confident on that. And I do believe sort of one of the first things you need to do when you're looking into a new market is to understand the market dynamics. Who are the players? Who are the competitors? Sort of doing that really thorough market commercial due diligence. I do think that is vital. Understanding who's winning, who's losing, etc., etc.
Yep.
With that, it also comes sort of pricing, right? You need to understand. I mean, how is pricing? What has the recent transactions been in this country? These type of things. I think that comes with sort of that market understanding that you really need to be on top of. And then after doing so many deals, you have a good perception of what is a good deal and what's not a good deal. Whether it's in Italy, whether it's in Norway, whether it's in Argentina, you have a good feeling on, is this worthwhile or not? That doesn't change.
So you're pretty like extra cautious in terms of doubling down on your diligence effort commercially, knowing the landscape and the other players, who's winning, who's out there. And I feel like just because it is a new market. Are you working with other resources, third parties, that maybe you wouldn't in a market you're already in?
Short answer is yes. Yeah. I mean, we can work with all the big commercial DD providers.
Would you be more inclined to do that? Like, hey, because you bought a company in Norway, I can imagine you running to hire a big 4 to do it versus.
Yeah, we wouldn't do. We don't need consultants to tell us about the accounting software market in Norway. No, that's absolutely right.
But Italy, who would you hire in Italy just to make sure things don't go right?
Yeah. That could be one of the top firms. Could be Bain, BCG, McKinsey.
Okay.
One of those, or you could sort of go big 4 as well. Right?
So higher uncertainty, then that's sort of where you would take a chance on a big name consulting firm to help alleviate that risk.
Yeah, but I mean, it's valuable, right, to get that input, and they know they have.
Going blind. I agree.
So and you can do customer service, you can do expert interview calls, all these type of things. It does help you to get a proper understanding of the market. So I do believe that's important instead of just jumping into it.
How do you get like the right localized expertise? Do you call your guy at Bain and saying, "Hey, I'm looking at this deal in Italy"? It's like, "All right, I'll get you up my colleague over there and connect you."
Short answer is yes.
Okay. I like short answers.
Could be part of it. I mean, we also work with local brokers, right? If we don't have a local M&A person in that market, right, which we typically don't have when we actually don't have business there from before, then yes, typically we also work with local buy-side M&A advisors. They of course have a lot of knowledge around that market as well.
That would make sense. You could get a banker there that would know the nuances of negotiation. It's going to be a bunch of things you got to negotiate after LOI.
So one thing is the market knowledge, of course, but then, as you say, right, the whole cultural aspect, language, negotiation, culture, etc., etc. It is important to be local. Again, M&A is local.
How? I'm trying to wrap my own head around this, right? I'm going back to my deal in Germany because I'm like, I feel like this is exponentially more risky for me to do as an American company. That doing enough of these podcasts probably is the reason why I'm paranoid, is that there's all these like Pandora box of problems I'm going to run into after doing this deal, especially like the execution and integration. How do I get comfortable doing that? And how do I convince myself it's still a good deal despite I should just pay more attention in my backyard and look for things?
It's a good question, right? I don't necessarily think teaming up with a local banker doesn't necessarily hurt in that context. But enough. you should also ask yourself, right? How does this fit my equity story? Right? Again, sort of having that alignment. Does this actually make sense for us or not?
I want to go big. I want to go global.
Yeah. Then and then what's your plan with the company? The tech? Is it rip and replace? Will you continue with the tech stack? All these questions, right? That I think at the end of the day, if you plan to just migrate the customers, then you should look at it as a customer acquisition cost. Is your plan to continue the business? Then you can measure it on cash flow, right? So it's all these things that you should take into account.
I like the idea of getting a local banker. Bankers can be good. May try to not be good, and depending on what side you're on, but or what side they're on. How, if I were to pick up a buy side banker in this new market for their expertise, I don't want to pay banker fees on the buy side because I feel like that's stupid. I mean, it's not to knock any buy side bankers out there. I get it on the sell side because you're creating an auction and there's like a case around the value created. But on the buy side, can I find like an ex-corp dev person and saying, hey, I'll put you on like an hourly engagement or something like that? I'm just curious of like...
And absolutely, you can do that as well. You can do that as well.
With the buy-side banker?
Instead of a buy-side banker, yes.
But the buy-side banker is going to want fees.
He will have fees typically on a percentage deal, percentage base of the deal size. Yeah.
I like how you're being very honest with me. I really appreciate that. What's the typical percentage range?
I don't know if we want to go down that. It can vary, but it's for us, right? A buy side banker. I think it's as much a door opener as anything else, right? And to have that cultural aspect and to know sort of the market, because once we have an LOI, then the Visma M&A train takes over, and then we run the deal in our own way. Right.
So it's mostly about getting to LOI.
So getting up to an LOI, that's where we see that they can actually be helpful.
Still a lot of fees to pay. Can you negotiate the fees?
Absolutely.
So we can...
Absolutely. Nothing is signed before it's signed.
Okay, so we negotiate the fees. Otherwise, would that be a thing, is like find an ex-corp dev person? I feel like they would be as good, if not better.
And absolutely. And there are these platforms, right, where you can find M&A talent.
If I were to start a business now, I think that's like an interesting opportunity, is have like, I always like think tech enabled right away because I come from tech, but if you can bring in folks that have that deal expertise, that don't have that mindset of like the salesperson of I need a commission on every single thing. I don't know. I think there's something there.
Absolutely. Fully agree.
Somebody listening wants to build on that. Let me know. I can't stop what I'm doing now, but, glad to help out. So if we brought in the local expertise, we got comfortable doing that deal, that's probably the best thing. Any other big risk items of, just like executing the deal and making it successful, that why I should or shouldn't do the deal?
In terms of risk?
Yeah, because you're sort of going, in a first international deal, or just branching out into
we're still talking about the German deal.
We're talking about the German deal. We are.
Okay. It's a good question. I mean, there are risks. I mean, by default, there are tons of risk in M&A, right? So you need to get comfortable. I mean, you're not able to diligence everything.
It's being blind to risk, but then being like exponentially more blind because it's in a whole different country.
Yeah, different culture and
that's what I'm trying to learn from you. You teach me that, I will walk away happy.
Even different continents. I think it's when you've done 350 deals, right? You always have that. It's a balance, right? You need to understand the market. You need to understand the key DD topics. On the other hand, analysis paralysis, right? You need to know what's important and what's not important. Right? You can talk yourself out of any deal. I think that's the easiest way to do it, right? Easy peasy. Then you don't do then you don't do M&A. So right. It's actually pretty easy. There is always some issues with all deals, right? Even the slam dunk ones. There's always something that you can use as an argument not to do a deal. So sort of, I think there is always risk. But I do think if you do a thorough DD, I mean, then you do it with open eyes. You know the risks, and then you sort of say, okay, this is actually still worth it.